everyone, welcome back to my channel, the IrregularFx channel. So today guys, I will be doing pattern identification part 2. On my previous video I did the 2 patterns which were the continuations, so today we'll be doing the reversal patterns. Okay, yeah, I wanna do this thing and get over with it so that we can move on to the next chapter. Okay guys, so without any waste of time, let's get to the charts. Okay guys, so obviously reversal patterns, it's whereby the market changes its character, it's whereby the market changes its direction. Okay, as the name says itself, it's a reversal pattern. Okay, so obviously we have 2 of them. We have a bullish reversal. We'll also have a bearish reversal. Okay, so this is what happens whenever we get that pattern or a flag, a bullish reversal flag or a bearish reversal flag. Okay, so as you know guys, the market moves in 3 phases. The market moves in 3 phases. The first one is the impulse, the second one is the correction, and the third one is the last impulse. Okay, so let's say, okay, for the for the bearish reversal, for the bullish reversal, the market will be pushing down impulsively, then it will create a low. Okay, it will create a low, then push back to the upside to give us a high, then it has to push back to the downside. Okay, and break the previous low, creating another low, a lower creating what we call a lower low. Why do we call it a lower low? Because this low is lower than the previous low. Okay, then after creating the lower low, it has to push back to the upside, trying to push back to the upside. But what does it have to do? It has to fail to break the previous high that it has created, giving us a lower high. Why do you call it a lower high? We call it a lower high because it's a high, but it is lower than the previous high. Okay, so the minute it gives us a lower high, then pushes back to the downside, that's where we know that, okay, now we're having a bearish a bullish reversal pattern. Okay, so when you see something like this on the chart, you go to a trend line, you construct your 2 points. Okay, you construct your 2 points. The first one being the low, the first low, which is the higher low, then the second one being the lower low. Okay, the second one being the lower low, then you do again, you go to a trend line again, then you construct the resisting trend line. This one is the supporting trend line, then this is the resisting trend line. So you also construct on your 2 recent high points. Okay, so here it was the 2 recent low points. Now we're connecting it to the 2 recent high points. Okay, so it's here and here. Then we wait for a third touch. Where here, then on the third touch, that's where the market usually does the market usually reverses. Okay, this is where the market usually reverses. Oh, my bad. Yes, this is where the market usually reverses. Okay, Yeah, then for the bearish reversal, it's just an inverse of this, the opposite of this. Also the market will be moving what in its normal three phases, which is the impulse, correction, and the last impulse. Okay, the impulse. Okay, so this is our impulse, our correction, the last impulse. Okay, so even on the bearish reversals, the same thing. The market will be what? The market will be pushing up to the up. Will be pushing to the upside. It will be going long. Then it will create a what? It will create a high. Then try to push back to the downside to gain some momentum, trying to consolidate to the downside. Then pushes back up. Okay, pushes back up. It has to do what? It has to break the previous high, creating what? Creating a higher high. Okay, creating a higher high. We call this one a higher high because it's higher than the previous high. Okay, so this one is just a high, or we can call it what? A lower high, or actually we can just call it a high. Then this one, it's a higher high. Okay, then it has to push back to the downside again, but it has to fail to break what? The previous low, creating what? Creating a higher low. Okay, creating a higher low. Why are we calling it a higher low? It's because it's a low, but it's higher than what? The previous low. Okay, then after creating a higher low, the minute it pushes back up to the upside, that's where you know that, okay, now I'm having what? I'm having a bearish reversal flag forming. Okay, then go to trend lines, you construct the 2 points, your first high, you construct it to your higher high. Okay, then for your supporting trend line, also you construct it to your low and your what? And your higher low. Okay, then you wait for what? For a third touch. Wait for a third touch. Then after the third touch, that's where the market does what? It reverses. Okay, simple guys, simple, just like that, just like that. So this was just what? A demonstration. Let's go to the charts and try to identify these patterns on the real charts. Okay guys, for you so you can see it from here all the way to here. I have identified our bearish reversal inside this triangle. Okay, so let me show you how it formed. So obviously we're pushing, we're going impulsively to the upside. Okay, let me try to use a different line. Yes, as I was saying, we're pushing to the upside impulsive. Okay, then we went here to create what? A high, then went back to create a low, then went back to create what? Another high, breaking the previous high. Okay, which was this one. Then went back to create what? A low, which failed to break what? Which failed to break the previous low, creating what? A higher low. So the minute we push to the upside, obviously onto my to my trend line, then I constructed the 2 lines and waited for the third touch. Okay, waited for the third touch, then I constructed, I went to get my other trend line, then constructed the two lows. Okay, then I waited for my third touch here. Okay, I waited for my third touch here. Then on the third touch, that's where the market got reversed to the downside. Okay, that's where we got our bearish reversal. That's where we got our bearish reversal. Even though the market decided to try to push to the upside again, it didn't get to our that touch, didn't get to our high. It failed to break this high, telling us that this reversal is still valid, hence it pushed further to the downside. Okay, so yes, it's easy, guys. It's easy. Once you see it, you cannot unsee it. Okay, it just needs a little bit of practice. That's all. So let me try to find another bearish reversal so we can move on to the bullish reversals. Okay, yeah, so let's focus on the highlighted area. Okay, so here was our impulse. Here was our first impulse, then created this high, then went back to create a low, then went back to create a high over here, then came back to create a low. Okay, let me use this low and this high. Let me use this low and this high. Oops. Yes, went to create this high, then went back to create this low. So obviously we had our first high, then went back to the downside to create a low, then went back to the upside, creating a high which broke the previous high. Okay, creating a higher high. Okay, remember I said for it to be valid, you have to break the previous high, creating a higher high, then come back to the downside to create a low which has to fail to break the previous low, giving you a higher low. Okay, then from there, if you have those points, that's where you can go to a trend line and join those points. Okay, so here was our first 2 points. Okay, then for our supporting trend line, here's our other 2 points. Okay, here's our other 2 points. Then wait for a third touch. So just like I said on my previous videos, on the third touch, usually the market tends to break the trend line before giving you the impulsive move that you want. Okay, whether it's a continuation or a reversal, on the third touch the market tends to break the trend line. Okay, so that's what it did here. That's what it did on the previous pattern that I just showed you. It also broke the trend line on that touch. Okay, so yes, let me go to the last reversal pattern, I mean bearish reversal, so that we can move on to the bullish reversal. Okay, so on this one, I'm sure this one is the most clear bearish reversal that I found for today. As you can see, guys, we had this very strong impulsive momentum all the way from here to here. It was very strong. Then okay, let me show you how it formed. Okay, so we had this very strong momentum, bullish momentum. Okay, then when we got here, we formed we created a high. Okay, then we went back to create a low. Okay, then after creating a low, we went back to create a high, but it did not break the previous high, so it's not valid. Then we created this high, so this high broke the previous high. Okay, giving a higher high. Then we went back to create a low. This low failed to do what? This low failed to break their previous low. Then when we tried to push back up, that's where you saw that okay, now we are creating a reversal. Okay, then go to your trend lines, construct your two lines. Okay, construct your two lines. And for the supporting trend line, also the same. Construct your 2 points. I mean, not 2 lines, 2 points. Okay. Then you do what? You wait for your third surge over here. Then on the third surge, that's where you get your reversal. That's where the market reverses. That's where you get your impulse, not the reversal. That's where you get your impulsive move on the third surge. Okay, so yes guys, this is it for the bearish reversals. Let's try and identify the bullish reversals. Okay, let's try and identify the bullish reversals. So without moving any further, I already see a bullish reversal on this structure. Okay, on this structure, let me highlight it for you here. Okay, I already see a bullish reversal. Let me show you how it formed. So obviously here was our first impulse. Okay, then we created this low, went back up to create a high. Okay, but this high was broken by this one. Okay, so this would be our valid high. Okay, then we created this high, then we came back to create a low. As you can see, this low broke the previous low. This low became our lower low. Then we went back up to create a what you call a high. But the high did what? The high failed to break the previous high. Okay, so we had our high here, then we had our lower high. Okay, so after having our lower high, that's when the market pushes back to the downside, that's where we know that now we're having a bullish reversal. Okay, so you go to your trend line, take your trend line, you connect to your first 2 points. Okay, connect your first 2 points. Then for your resisting trend line, you also connect your first 2 points. Okay, then on the supporting trend line, you wait for what? You wait for a third touch. Wait for a third touch. We're over here. So as you can see, on the third touch, the market did what? It broke the trend line before giving you your impulsive move. Okay, so it's easy guys, it's very easy. All you gotta do is practice. Guys. As the saying goes, practice makes perfect. Okay, yeah. So okay, let's try and find another one. Let me zoom in so you can see. Zoom in. Okay, it seems like the error is too large. Okay, I'll have to zoom out. Okay, so here was our first impulse. It's a bit complex, but I'll try to simplify it for you. Okay, so here was our first impulse. Okay, so we went all the way to, okay, then we created this low. Okay, then we came back up to create a a high, then went back down to create a low which broke the previous low. Okay, then went back up to create a high. Then when we pushed back to the downside, that's where we saw that, okay, now we are creating a bullish reversal. Okay, now we're creating a bullish reversal. Okay, let me highlight it all the way to here. Okay guys, that's where we saw that now we're creating a bullish reversal. So yes, then from there took our trend line, constructed it from our low, which was this one, then to our second low, then waited for our third touch. So I almost forgot to draw the resisting trend line, which is this one. So like I said, this structure is too complex, but notice something guys. On our third touch, the market broke the third touch like dismally, but obviously you wouldn't enter while you see that the market's still dropping. You have to wait for it to come back inside your your trend line. So if you elongate it, you did get an entry because the market broke. Okay, the market broke your trend line, but it came back, and when it came back, it went in, then came back to retest your trend line. Then that's where you could have entered. Okay, not while the market was still dropping, because there was no reason for anyone to enter here on a buy, unless if by some strategy that you're using you had a confirmation of a sell. But if you are trading using these patterns, you only enter when the market is inside your trend line after breaking it. Okay, so yes guys, this is it for our reversals. This is it for our reversal patterns. Okay, okay, I know I said this was the last one, but I can see it's too complex. Let me try to find an easy one. Let me try to find a clearer one. Okay, let me try to find a clearer one. this strong move to the upside. Okay, so we're pushing to the downside. Okay, we're going bearish all the way till this point. Then we started to consolidate, pushing to the upside, creating this high, then went back down, then went back up to break the previous high, then went back to the downside, creating a low, then we went back to the upside to create a high, which failed to break the previous high. Then from here, that's when we know that okay, now we are having a reversal pattern. We're having a bullish reversal. Okay, so from this one, when the market is like this, when you have your two high points, go to your trend line, construct the two high points. Then for the supporting trend line, obviously we don't have a low that broke the previous low. Okay, so if you have something like this, as long as you have your two high points, okay, as long as you have your two high points, which is the high and the lower high, you can just clone your trend line from the two high points. Okay, clone it like this, then you drag it and connect it to the lowest point between these two points, which is the high and the lower high. Okay, so your lowest point between the high and the lower high is this one. Okay, then you wait for the third touch, which was here. Then on the third touch, the market does boom, it reverses, giving you the last impulsive move. So yes guys, this is it. I'm done with the patterns. For you to understand it better, you just have to open your trading view and practice. Try to find as many patterns as you can. So yes, this is it guys, I'm signing out. Oh, and please don't forget to subscribe for more content. Okay, don't forget to subscribe for more content, because in future we'll be trading together. I'll be doing some live trading with you guys, taking some trades with you guys, and show you how I capitalize using this strategy, the FALCON FX strategy. Okay guys, I'll see you on the next video.